Hey everyone, sugar stocks are finally looking again very good for some great risk rewards going forward in the next few weeks. The entire sugar space had an amazing rally back in 2021, and since the last 1 year, sugar prices have consolidated and so did sugar stocks. And finally, this is the right time to pick them. And today in this video, we're going to look at two sugar stocks and also we're going to look at electrode stocks. Now, as soon as I say electrode, it reminds you of Hagen Graphite, and that's what we're going to look at today. And don't forget to stay till the end of the video because I'm also going to tell you why sugar stocks fundamentally also are looking very good, and there's a huge change happening in the entire sugar space as well. So we're going to discuss all of this, but before that, as always, we're going to start discussing the Nifty outlook first, and then we'll take a look at these four stocks. Okay, so let's get started. So first, Nifty outlook. Actually, last week, what Nifty did is Nifty did a doji. I mean, by doji, I meant neither the bulls nor the bears had a win last week, and we saw some nice small candle, a doji candle, indecisive candle, and still we are holding on to that breakout zone which we had a breakout 2 weeks back. We are still holding on to that 17,950, 18,180 levels, and until we hold that zone of 17,950, 18,000 levels, I don't see a bearishness developing yet. Also, as I always keep saying, this channel also will need to hold for the entire market to remain bullish. Now, the consolidation is still continuing in the markets for the last 2 weeks, and it's just a normal consolidation. Remember, dollar index has already broken down, and I think that the world markets will continue to perform. So there's no reason to be bearish for me, and I'll continue to be bullish until we hold this channel going forward. So that's the Nifty outlook. So bearishness, if you're having, you need to question yourself, you need to question your thesis, and also see what prices are doing. Okay, so that's the Nifty outlook. Now let's take a look at the sugar sector. Now, sugar sector actually has been seeing a fundamental change in the entire sector itself. And there's been a lot of policies which the government is announcing. And one of the fundamental changes that's happening in the sugar space is the blending of ethanol into the fuel that we use in India for petrol or any other fuel that we use. And this blending of ethanol is currently around 4% to 5% levels of, for example, if we have 1 liter of petrol, so probably it's 4% of that 1 liter is ethanol. And the target for the government is to take this 4% to almost 20%, somewhere around 2025 odd levels, right? So from 8% to 20% is a very major increase in the ethanol blending. And sugar industry is going to do this effectively probably going forward. And which means the entire sugar space itself, all the sugar stocks which have a major capacity of capex in the ethanol space will do very well going forward. Okay, now which also means that a part of the sugarcane that's coming into the farmers, coming from the farmers to the companies, is being diverted. Now, sugar as such does not have great margins, the sugar sector itself, but with the ethanol coming in, the ethanol is going to bring in a good margin for the entire sugar space, and overall the sugar inventory also is going to go down because let's say you had 100 kilos of sugar always coming in, sugarcane, and out of which now 20% is going to ethanol. The remaining 80% is what you have, which means the inventory levels are going to go down in terms of sugar inventory, and that's what we're seeing here. The trend in overall sugar inventory is going down. We've already gone down from 8 tons to probably 5 million tons, right? So that's sugar inventories at 4-year low of 6.4 million tons. Now, this means that the supply side is getting reduced. Now, demand of sugar is not going to reduce, but if the supply side gets reduced, the sugar prices will probably start heading higher going forward. And that's the primary reason we're discussing sugar today, because the sugar prices are setting to head higher again after 1 year consolidation. And if the sugar prices head higher, then the sugar stocks will benefit definitely. Now, India is one of the major exports of sugar, right? And the other big countries also Brazil. Now, even in Brazil, they are moving sugarcane towards ethanol in order to reduce their overall imports of oil. Now, crude is already at high levels, and this is a report that I've taken from ICICI Direct. And Brazil also is diverting its towards ethanol, and which also means that the supply side of sugar is going to be constrained. It's going to be limited, which will keep the sugar prices much higher. So now, having said that, let's take a look at the sugar prices itself. Right now, sugar prices, you can find this on tradingview.com. Now, sugar prices have broken out in 2020, 2021. I did post this on Twitter, and sugar prices have broken out from a very long-term downtrend. And now, since this breakout here, we had this long 1.5 year consolidation in sugar prices. And now this week, again, we are seeing a breakout. And on Friday, We had a really good move. It retested the breakout level, and again we had closed higher on Friday. So overall, sugar prices have remained very strong, and they might tend to head higher going forward, which will benefit the entire sugar sector in India. And we're going to look at two stocks from the sugar space, which will benefit as well. Now, the first stock that we're going to discuss today is Dwarkesh Sugar Industries. Now, this is one of the leading sugar stocks or sugar companies in India, and it will really benefit from this whole ethanol blending concept. And given that it has also a decent capex in the ethanol business, the margins will tend to head higher in the next couple of years. Now, there's also a research report which says that the sugar companies will have really high profits margins the next couple of years, and that's going to really take the sugar prices and the stocks much higher from here. Okay, so this is a small cap company around 1,700 crores. It has ROC of 20% and 24%, which is pretty high, and PE is around 13%. Right now, that's kind of decently valued for a sugar company, given that it's a commodity. I don't expect it to trade at 40 or 50 PE. All companies can manufacture sugar. It's just about being cost efficient and all that. So taking a look at the weekly charts of sugar, of Dwarkesh Sugar, this stock has kind of retested this primary trend line. Now, this is a primary trend line for me because we had this swing low in March 2020, code crash, we had this low. So connecting these two, and we have this beautiful long-term reversal on the on Dwarkesh Sugar. And from here, the probability of the stock heading higher and probably giving you a 50, 60% or 100% returns is much higher than taking a small loss, which is very minimal at current market prices. So the risk reward is very high. And given that the entire sugar space is breaking out, this also might head higher as well, right? So there has been a volume spike in the last, out of the last 3 weeks, 2 weeks, we've seen some good volume spikes. And we also had this higher high, higher low intact. So we're still forming an uptrend. We have still reversed from the zone, and we might head up higher from here. So I'm going to zoom into this area to show you what is happening in daily charts. So in daily charts, this looks like a descending triangle. Let's not get into patterns, but this is a beautiful trend line with multiple touch points. Now, a trend line is valid when you have multiple touch points and a breakout from here, which means if you take out that high of this week, then we're going to see a very strong uptrend in Dwarkesh going forward. So which means we're going to keep a stop loss around this level. The stop loss is going to be around 87 or 7 points, or just 7.5% as stop loss. I'm going to look for targets of 150, which is almost 50 to 60% returns from the current market price, and the stock might do well going forward. So that's the first stock. If you did like the sugar analysis that I just said, both the fundamentals and technicals, do let me know in the comments, and don't forget to hit that subscribe button and like the video as well. So let's take a look at the second stock for today, which is Mahawana Sugars. Now, this is even a tiny small cap company, just 300 crore market cap. ROC is not that great, like Dwarkesh Sugar that we discussed, but probably it's trading at a high PE because of the entire sugar space. So it's not a great company like Dwarkesh that we discussed just now. But keeping that aside, I believe this stock also has a great risk reward at current market prices. We see this huge weekly candle here with amazing volume spike in volumes, and this all stock has also reversed from primary trend line. Okay, so for me, again, this is a beautiful setup to go long at current market price. There's hardly anything to lose, and we've reversed with some beautiful volumes this week. Okay, so I'm going to focus on this area here, and again, a descending triangle pattern over here, and we formed a double bottom probably, and we are heading higher from here. Now look at the volumes that came in Wednesday and Thursday. The volumes have been very good, and if we kind of head higher from here, it's going to be a great ride in Mahawana Sugar as well. So which means you buy the stock at current market price 84 rupees. We're going to keep a stop loss of 13% or 73 rupees stop loss, and we're going to look at targets of 170. Right, 170 is this previous highs over here, and the stock might head there pretty soon. It's slightly more than 100% returns from the current market price they're looking at. Okay, so that's the second stock from the sugar space. Now, while sugar sector itself is doing well, I also found another sector which is doing excellent, probably which might do well going forward. It has made a major bottom, and that sector is the electrode space. And we have two famous stocks in India which control some of the significant market share in the world. One is HEG. Another stock we're going to take a look at today is Graphite India Limited. Now, both these stocks have beautiful risk reward right now, very small risk, but you're looking for great returns in both stocks. So first stock is HEG. HEG is a small cap company around 4,000 crores. Again, a pretty decent ROC and ROE for a company like HEG. Now, remember the electrode business itself is a very capex heavy business, and both these companies are the only two big players in India, and they have to serve all the steel sector, entire steel sector in India. So if the entire steel sector is going to do well, these two stocks will also have to do well. Okay, so As always, I'm going to look at the monthly charts of HEG, and what a beautiful setup we have here, right? So this channel has been a beautiful long-term channel, and we kind of retested that channel over here again after many months, right? So we retested this during the COVID crash. We went all the way up, and we kind of retested this now zone here. Now this is a confluence of support. Now by confluence of support, I mean that we have the horizontal support plus the trendline support here, and at this point, this is a beautiful setup to go long on HEG and buy some good quantity and keep it in your portfolio. And also don't forget, here we are seeing some wicks around the months of May and June as well here, right? So this entire price action, if you see on the monthly charts, it's a beautiful setup where we are seeing some demand coming in at this zone. And also this is a breakout zone. So for me, it's amazing setup to go long. Let's take a look at a zoomed in chart of the zone that I just showed you, right? So if you look here, this was the breakout zone back in 2021 Feb March, around when we broke out with huge volumes. We went all the way up, we consolidated, then we broke down again, we retested the zone again. Now volume is coming in around the support zone here. We did retest here, and again we went high, we again retested. Now always when you're buying stocks, you have to have some patience because these kind of retests do happen. And when you see the second time retest, that's when you confirm that the stock is probably made a bottom, and then you go long. So what we're going to do is, with this huge, nice weekly candle here, with the doji, with a wick on the previous week, and the spikes, I feel the stock is going to head higher from here. So we're going to buy the stock at current market price, which is 1050. Keep a stop loss of 890 or 15%, and we're going to look for targets of 2600. Now that's almost 140-50% returns from the current market price, which is 9 times the risk that we're taking here. So apart from HEG, you can also do a portfolio of stocks and buy graphite as well. So you can buy probably a few of HEG and few of graphite. Both will probably have a very strong correlation. So both will probably do well. So you can also fix on one stock and just buy one stock to ride the gains. So next stock is graphite, which is a mid-cap stock. Again, pretty decent ROC, ROE. It's almost similar profile to HEG. So nothing much here to talk about in terms of fundamentals. So here again, we had a breakout back in 2017. We kind of retested this entire primary trend line again. Now, such kind of retests are very rare. I hardly seen such stocks, which retest after going up almost 1200, again falls back to 100 levels. That's just crazy retest. But what we've done is we again had to move up, and we kind of retested the zone again, right? And last 6 months, we've consolidating very well around the breakout zone, which we had here. And I see that stock might head higher from here. So again, this is a breakout zone. And again, we retested the zone. Now remember, HEG also, we had a similar structure. We also have a similar structure here in graphite. And I think we've had this wick over here, and again we had some nice 6 weeks consolidation over here. So overall, I find the signs of accumulation in the stock, and we might head higher from here. So again, look at the spike in volumes. Look at the weekly candle here. We've had a bullish candle after 6 weeks of consolidation. So overall, graphite might head higher from here as well. So you can buy the stock at current market price, which is around 390 levels. Keep a stop loss of 10%, which is pretty low compared to kind of gains that you're going to look at here. It's almost 100% returns. So that brings us to almost 10 times the risk that we're taking here. 10% risk and 100% reward in this stock. So yeah, I hope you love these 4 stocks that we discussed today from the sugar space and the electrode space. Don't forget to keep your stop losses, and don't forget to enjoy this beautiful setup and the trend that we're going to have in the next few weeks and months. Okay, so that's it for today. I'll leave you here. Take care, stay safe, and trade safe. Until I see you in another video. Bye-bye.